In this video, I'm going to talk about two penny stocks that I see tremendous potential in. But I want to strongly preface that I normally do not buy penny stocks. Most people lose money in penny stocks, and I'll tell you exactly why before I make my case for these two penny stocks that I believe will have massive potential. Okay, so last year I recommended a penny stock, Crescent Point Energy, stock ticker CPG, when it was trading below $4. And today the stock is trading at almost double the price, with the price reaching above $10 at one point. So while I rarely recommend penny stocks, as you can see, you can still make a lot of money with good penny stock companies. If you find any of this content helpful, I would really appreciate a like or comment below to let me know your thoughts on these two or any other penny stocks. Okay, so first, let's define what a penny stock is. A penny stock is a publicly traded company that has a low stock price and does not typically trade on one of the major stock exchanges. You normally have to buy penny stocks over the counter, OTC. And not every broker will allow you to trade over the counter, so be sure to check with your specific brokerage if you're wanting to trade OTC. Penny stocks used to be classified as any stock trading less than $1, hence the name penny stock. But today most people consider any stock trading under $5 to be a penny stock. And with a more broad definition like that, it's changed the name of the game. You can actually trade a number of penny stocks on a major stock exchange. But that being said, penny stocks are still extremely risky. The first stock I ever bought was a penny stock, and then it got wiped out within a year. Thankfully, I had only invested a little bit of money into it as I was just so new to the stock market. And there is no shame in admitting that you're a newbie to investing in the stock market. But it's really important to recognize that you're not going to get rich quick, much less know what you're doing or getting yourself into when you're looking for penny stocks. And if there's one truth that I learned that is invaluable for the beginner investor, it's that the stock market is almost always stacked against the retail investor. And that's because the human brain is wired in such a way that makes most retail investors terrible investors. When we see our account drop to a certain extent, our emotions tell us to sell and cut our losses. But when the market is running up, we have fear of missing out, FOMO. So we buy when a stock is expensive and we sell when a stock is cheap. But we never see the opportunity when a company's stock drops, and that's because we don't hold strong convictions in just a few companies that we have on the top of our list. So for most retail investors, Warren Buffett recommends dollar cost averaging into exchange traded funds, ETFs. But the truth is, you also won't make outstanding returns just buying ETFs, which is fine if you're a passive investor, but if you're wanting to be different from everybody else and leverage risk and reward, you'll want to make sure your risks are calculated and informed. So why do most penny investors lose money? Number one is lack of information or research. Most people just don't put in the work to research the companies that they invest in. This often involves studying through the company's financials, listening to the earnings calls, looking at a forecast, and so on and so forth. With penny stocks, it can often be very difficult to find information on penny stocks because they are not subject to the same level of scrutiny from regulators as stocks that are listed on a major stock exchange. Number two is lower liquidity. How stocks work is there is always a seller and a buyer. And with penny stocks, these stocks have very low capitalization rates. As such, they have very poor liquidity. It basically means that it may be hard to sell your stocks when you want to. So if the stock runs up or if it goes down, you may not be able to sell the stock because there aren't simply enough buyers. And number three is higher likely of bankruptcy. Most penny stocks are companies that are either relatively new or established, but due to unforeseen circumstances approaching bankruptcy. Both new businesses and companies in financial distress are more likely to completely go bankrupt than a company with a strong balance sheet and long track record of revenue and earnings. So why invest in penny stock companies? Okay, so now that I've laid out all the risks of investing in penny stocks, why should you still consider investing in a penny stock company? If you've done the research and found a company that you believe in that happens to be trading at a very low cost, why wouldn't you invest in it like you would in any stock that you believe would give you potentially great returns? The key word is research. Don't just buy a stock that got hit or is down a lot year to date. Often the market is smart and prices in a company for a very good reason. But if you find a company with strong fundamentals that's trading at a low price, then I would say go for it. So with that being said, here are 2 penny stocks that I've personally researched and would recommend as buy today. Remember to do your own research as well and comment below and let me know what you think of these 2 companies. So the first company is Avant Brands, stock ticker, and keep in mind is over the counter AVTBF. Avant Brands is in short a cannabis company. The company manufactures, distributes, and markets handcrafted cannabis products all across Canada. Its revenue have grown from $57,000 in 2018 to $9.5 million in 2021. Almost 30% of that, which is about $2.75 million, is in profits. Then went from having less than $1 million in the bank in 2018 to $14.5 million on their balance sheet in 2021. Cash flow has continued to grow year after year, and that's why I really think Avant Brands is up to something really incredible in the field of cannabis. Okay, the second penny stock is Honest Company, stock ticker HNST. The Honest Company actually trades over a major stock exchange. Honest is trading below $4 today, but I believe it has huge potential as they just plan to have distribution of their products throughout Walmart this year. Honest provides natural and eco-friendly products for the home. Founded in 2011 by Jessica Alba, the Honest Company's mission is to provide safe and healthy products for families all across the world. The company offers a wide range of products from baby food and diapers to cleaning supplies and personal care items. In addition to being environmentally friendly, all of the Honest Company's products are also cruelty-free and not tested on animals. Honest is trading at over 80% down from its peak of $17, so you would be getting in on a huge discount today. Small cap companies have been beat down as a whole, but today Honest is stronger than ever with its baby and beauty products in over 40,000 retailers, and that's without Walmart. With their added distribution through one of the largest retailers in the US, Walmart, I believe Honest stock can easily double or triple in the next few years. What do you think of these 2 penny stocks? Comment below and let me know your thoughts. As always, make sure to like and subscribe for more videos like this. Thank you so much for watching, and we'll see you in the next video.
With every star, we are born again. Open your heart, spend this time in your head.